Are you surprised at all by
No.
what happened or what was said?
No, I think this is exactly what the markets expected. It was very straightforward that there really is not a change of information since the last meeting, and they had indicated they were likely to cut, and then they did so. No real surprises in terms of the data coming in, and no real surprises in terms of what the Fed said it was going to do, and then it's what it did.
If you had been in the room as they were debating, where would you have come down on it?
So I would have been with the dissenters.
Really?
Yes, because I think that when you look at where the situation is, we're really in a situation where the economy is still growing, we're at record low unemployment rates. There is an issue which I don't have the information about what they think is going to be happening to inflation. And in fact, I don't think they really emphasized that enough, that the reason for actually cutting rates would be if they don't see inflation coming back up to 2% very quickly. And I think then there'd be much more justification for doing this. But on the other hand, in terms of growth, there are these things that we worry about, particularly what's happening in trade, which is affecting exports and capex. But on the other hand, I think Trump has tremendous incentives right now to make a deal with China. Not one that I think is going to be particularly a good deal, but one that I think will take away some of that uncertainty.
Well, you have another dissenter here to my right.
Yeah.
You would have dissented as well.
Yeah, I would, for very, very much the same reasons. And I think also, if we're going to, I know we should perhaps take trade policy as exogenous, but you can't, the problem is that if the Fed cuts and then that's seen as a reason to be more aggressive on trade policy, that probably doesn't really work very well either. So, I think it's right. Look, they've taken down rates 75 basis points. We've now got negative real rates. The economy is basically growing at the correct pace. Yes, inflation's a little low, but unemployment's a little low too. So to me, that X's out. Monetary policy really should be unchanged.
Yeah, the only thing I disagree with you a little bit on, which is that you're right that there's this sort of game that the Fed can play with the administration on this, but that's not really the remit of the Fed. So even if, from one viewpoint, you think that they can be encouraging the president to be tougher on trade because they're basically easing, the Fed's remit is to be completely non-political. So in that sense, I don't think that's an argument for them not to cut.
It's a tough situation for them.
It is,
because of course the other side should not be political with the Fed.
In many ways, look, we're in a tremendously changed environment here. We have a president who's is trying to politicize the Fed. The Fed is trying to make sure that they are not indicating that that's the case. However, their cuts basically can be interpreted by people as giving in a little bit to the president. So it's just a very, very complicated environment. Not a particularly good one, by the way. And in fact, a lot of both theory and also what's happened in the world indicates that this kind of situation with the president doing these kind of attacks is actually not good for not only the central bank, but not good for the economy either. It's very unfortunate, but, that's life.
You mentioned we've talked about the market reaction. You think they did, pretty well in terms of the statement. Do you think that they're dreading the press conference a little bit? I mean, this has been the event the last couple times around where maybe the initial reaction was sort of stable and then a wrong turn of phrase or an indication from the Fed chair, intentional or otherwise, can send things belly up.
Look, it's really tough to do these press conferences. People are worried about every single word. I can tell you that one of the things that is remarkable in the meetings is how much time gets spent on one word. Now, I'm not subtle enough, so that was something that I never felt. My English skills are such that I can write well, but it's very straight.
Tyler in there.
But I never got those nuances in English class when I was in ninth grade, and so I never could get that. But
it's going to be over a few words this time in terms of that change of language. Do you think that really signals something different?
Oh, sure. Oh, sure. In the sense that the Fed is no longer saying that they're going to cut rates at the next meeting, and in fact, that was completely appropriate.
They're not saying that they're not going to.
No, and I think actually this is where I disagree with you slightly. That. I think that the bottom line is, and in fact, this is one of the things that I've been not completely happy about in terms of the Fed's discussion about policy, which is that they should be more upfront about how policy will change if economic circumstances change, giving scenarios as to what will happen. And we don't know what could happen. We could get new data coming in that says the Fed should cut a lot more.
Maybe that's what you'd ask them if you were in the press conference.
And maybe, but luckily I'm not in that position. It's good to be a professor, so I like doing exactly what I'm doing right now.
But I have a question. If the Fed telegraphed, in this situation we do this, in this situation we do that, don't they lose a little bit of the element of surprise they have on those announcements to the degree they want to shape market sentiment?
No, I don't think so. I think actually Mervyn King had this wonderful phrase that said that what central banks should be as boring as possible. Mm-hmm. So the more you actually, the markets understand what your reaction function is, your reaction, how you're going to react to new data coming in, the better off monetary policy will work.
But I know we have to finish this, but if Europe hadn't had whatever it takes, that bazooka, would we have gotten the same positive reaction in Europe that they needed to have a recovery? So I don't agree with that fully.
Okay, but so the whatever it takes was actually an indication of what they would be doing in the future. So in fact, I think the ECB's problem was they were always behind the curve. And this is one of the reasons why they had to make this very bold statement. But indeed, if the ECB had made it much clearer earlier that they were going to do whatever it takes, it could have been a softer statement, and actually I think things would have been better. I mean, I've been very unhappy with European Central Bank's monetary policy. They've been always behind the curve. I'm not sure that I completely blame this on Mario, who is a classmate of mine, so I'm a little bit biased. But that's become a very dramatic institution which never worries enough about inflation being too low.